Welcome back to the Fire Grind. My name is Daniel, and on this channel, we talk about personal finance with a focus in the stock market. And in today's video, we're going to be addressing why the stock market rose by 2.62%. That is, the S&P 500 rose by 2.62% this Friday. And as I'm recording this, it's right now around 12:30 a.m. on Saturday. So I'm just going to talk about what happened on Friday right now. If you've been keeping up with the news headlines, you'll notice that the US employment rates actually went up. I think they're around 14% in the month of April. However, at the end of May, they reported an unemployment rate of 13.3%. And what this translated to in the number of jobs added is that the US market actually added 2.5 million jobs in the month of May. On the other hand, analysts actually expected a drop of 8 million jobs. So analysts on average were off by 10.5 million jobs. So this piece of news shook the market, and investors were in for a great surprise as they saw another green day to end off the week. On the other side of the border in Canada, we actually saw 290,000 jobs added. However, unemployment rate actually dropped. And you're probably wondering, why did unemployment rate drop when we actually added jobs? And the reason is, unemployment rate dropped to 13.7% because students were included in the unemployment rate. As students are off from university and looking for summer jobs right now, this population mass has been added into the number of people unemployed, therefore increasing the unemployment rate. And if you look back to when the government of Canada actually announced CESB, they actually also promised to generate 76,000 jobs. But if we look at the increase in the number of people unemployed, we actually see that 491,000 extra people were unemployed in the month of May. And predominantly, most of these are students. The 76,000 jobs that are promised by the government of Canada will not even cover 20% of the 491,000 extra people that were declared unemployed. Also, if we actually go back to February and look at the unemployment rates there, the unemployment rates in February when the market was at an all-time high, it was at 5.6%. And if we look at today, the unemployment rate at the end of May was 13.7%. This is more than double. Although we saw some positive news in terms of job numbers, this does not mean that we're out of the woods yet. With unemployment rates in Canada at 13.7% and the unemployment rates in USA at 13.3%, this is still significant. There's a lot of people that are unemployed and they're receiving money only from stimulus checks or from CESB or EI in Canada. And this can continue to become a thorn in the economy's side going forward if these people aren't transitioned from unemployed to employed. So why did the stock market pop by 2.62% in the general markets today? It's because people bought on this news. They saw optimism right now and they think that the recovery is coming very soon. And the fact that analysts were significantly off from their estimates, this really pushed the bulls to buy in heavy today. They bought in so heavy such that the Nasdaq is currently actually at all-time highs. Yes, it surpassed the February all-time highs. And the S&P 500 is only within 5.5% of its all-time highs in February. So the conclusion that I draw from all this is that investors are currently extremely bullish that the economy is going to recover very soon. And investors are actually buying in for future expectations rather than looking at what the economy is doing right now. Because if people invested based off the economic condition today, they would be selling out rapidly. There are many companies that are completely shut down and other larger companies that are operating at maybe 20 to 30% efficiencies. And if you look at the industries like the airline or the cruise stocks, they saw a huge boost in price today, yet we didn't see any sort of positive news in terms of the number of flights being flown or the number of cruises being shipped off. I would love to know your stance right now if you're currently buying stocks as the market is rallying, or if you have a bearish stance and you're putting your money into cash and waiting for the next market drop. So please leave that in the comments down below. So now, what is my take on all this? Am I going to be a buyer of stocks, or am I currently going into more of a cash heavy position? If you couldn't tell from my commentary earlier, I am currently kind of bearish on the market. I don't think this current stock market rally can continue to sustain itself. It may do so in the next couple of weeks, or maybe in the next couple of months, but I think there will be another major pullback, or at least a consolidation period. And I think I'll be waiting until then to buy, because right now there's still too much risk in the market for me to put my money into it. The news that I see right now isn't really positive, it's just not as bad. And this kind of news isn't stuff that I like to invest on. I like to invest on some sort of positive signs to know that the economy is actually recovering. I don't put too much weight into the fact that the economy is not falling as fast as analysts think. And the reason for this is I don't really foresee an economic recovery happening that quickly. Sure, businesses may start opening up and people may start going out. However, this presents even more risk. What if the pandemic has a second wave? This has already happened in places like Singapore and Japan. And news articles have reported that it's actually hit these places a lot harder than the first wave. But right now, with all the frothiness in the stock market, investors are blindsided to the second wave. I think the reason why people are buying in so heavily right now is because over the past 3 years, if you look at the trend of the stock market, it's just been shooting up and up and up and up. And people miss those gains. So the fact that the stock market is rallying right now, there's a lot of FOMO in the air, and people are buying in because they think that the stock market will continue to rise. And this is very dangerous from my point of view. If there's no economic data to actually support this market rise, such that it's going back to the all-time highs of February, then to me, there's really no reason why it's going up other than people are having FOMO. At the same time, I don't plan to increase my short positions on the market because that wouldn't really be wise. As an investor in what I've seen in the market so far and being burned a couple of times, I think that it's not really good to hold a large short position on the market because in general, everyone knows the stock market will continue to rise 10 to 20 years from now. It doesn't matter if you buy now or buy a year later from now, likely you'll be up if you wait 10 to 20 years. But in a frothy market like today, there's still going to be some good deals out there. Some industries that might not have recovered as quickly are REITs. And these are down significantly because a lot of malls have not opened up yet. There's a lot of storefront businesses and strip malls that have started to open, but the general malls that we see out there, they're still closed. So these REITs, I don't expect to recover as quickly, but when they do start to recover, they might see a recovery similar to the airline stocks that we saw today. The last thing that I want to talk about on this video is my prediction for when the next stock market crash might come. And I'm not saying that it will happen, but this is just my speculation. There are 3 different scenarios where I think we could see a second stock market crash. The first one being when Q2 earnings come out in July and August. And these Q2 earnings will actually give the real picture of how badly the economy has been affected by this whole pandemic. The reason why Q1 didn't exactly count is because Q1 only took into account 1 month of pandemic. Basically, Q1 went from January to March, and the whole pandemic hit North America in the month of March. But Q2 will include April to June. And in those 3 months, the whole economy was locked down, and April was worst of all. I think that if we see terrible numbers from companies in Q2, as well as grim guidance or even no guidance at all because companies aren't willing to put that out there, we could see a second stock market crash. So that's scenario 1. Scenario 2 for when I think we could see another stock market crash is if there's a second wave in North America. And this might happen in July or August. And the reason I say that is because we can see that currently in the United States, they're actually pushing for the economy to open very quickly. Whereas in Ontario or within Canada, it's a bit of a slower open because I feel like in Canada, we're a bit more conservative in terms of jumping into action too quickly. So I think as Canadians, we will probably be watching across the border to see what happens, and our leaders will make their decisions based off of how the whole situation is in America. But if there is a second wave, it's going to happen in July and August because as people go out in June or early July, this is when the disease could possibly spread even more. And also, we can see that airlines are also opening up. There's more flights being taken. So again, this is a way for the disease to propagate a lot quicker across the continent and even globally. And the third scenario where I think we could have another market crash is that if we don't see a market crash within the summer because of Q2 earnings or because of a second wave, then it'll probably be around November to December time. And the reason why I say this is because typically in November or December, fund managers like to sell off a lot of their stocks and book their profits for the year. And this actually happened in 2018. If you look at the end of the year, stocks actually started to drop and they dropped maybe around 17%. So I think that if we see a huge market recovery throughout this full year, fund managers are definitely going to sell off in November or December because it's really unwarranted for what we've seen in the stock market. Businesses are not going to recover as quickly as people thought, especially not to the levels of all-time highs. There's no way that the economy is functioning at all-time high levels when a lot of businesses are going to only be operating at maybe 50% at that point. So those are the 3 times where I think we could possibly see another stock market crash. You can take this with a grain of salt. This is just something that I like to do for fun and give you guys some insight as to what I'm thinking about. If you agree with me or disagree, leave a comment down below to let me know when you think we're going to see the next stock market crash. Or maybe you don't think we are gonna, so just let me know again in the comments down below. Also, smash that thumbs up button, subscribe, and hit that notification bell to help my channel out. Keep up the grind and have a great day.